Hey, what's going on, you guys? It's Marcos. So remember when your dad used to tell you, well, when I used to drive, gas was 88 cents back in my day. And you just really never paid too much attention to that until, well, you pull up at the pump and you really start to wonder when the hell is gas prices going to stop? Or when is even my gas tank going to stop swallowing up all this gas? Or even before you pull up, you see this. Now, I'm pretty sure by now you noticed that the cost of pretty much everything just went up, and it's official. We can't buy anything with this anymore. Because from houses to computers to cars to chips, Nikes, gas, and yes, even eggs at the store, the cost of living has gone up this year. So today we're gonna talk about not everybody's favorite word, inflation, but what's really going on right now. Why are the markets going down 600 points one day, they're up 500 points another, the rising cost of living, and ultimately how you can take advantage of all this to start making some serious money. But guys, before we get started, just a word from our sponsor today, myself. That's right, this video has absolutely no sponsor, so I'm not going to ask you to buy anything. I don't have a course to sell either. And the only thing that I'm going to ask you, just definitely, and this is for the 4+ hours it took me to put this video together on a Friday night while all my friends were out partying, is to help me inflate the like button for the YouTube algorithm. So go ahead and smash the button right now. And with that being said, let's go ahead and get started with the topic at hand, inflation. Okay, so earlier this week, bond yields decided to go on a wild ride and surge to the highest level since 2020 as bonds sold off and the market subsequently went the wrong way. Now, this happened for a lot of factors, but primarily the speculation that the Federal Reserve will start pulling back on their massive bond purchase spree since last year because, well, they're getting more and more afraid that inflation is not being as transitory as they initially thought. Now, of course, it's no surprise that we've noticed price of items going up, but things get significantly worse when our beloved Dollar Tree can sell items at $1 anymore. As it is official, it's breaking the buck by adding $1.25 and $1.50 price points in some stores. Now, this is due from inflationary pressures, rising freight, and labor costs. And at the moment, the network of ports around the world, container vessels, trucking companies that move goods around the world is badly tangled, and the cost of shipping is skyrocketing. In fact, the cost of shipping from China to North America and Europe has continued to climb over the past few months, as indicated by the World Container Index, which provides weekly assessments of container freight rates, daily forward price estimates, and historical price movements, has shown that the cost of shipping a 40-foot container on one of the 8 major east and west routes has hit over $10,000 in the week ending on September 30th. That's actually yesterday because I'm shooting this video on October 1st. And that's 292% from a year ago. So if you're wondering why it's taking rooms to go over 12 months to deliver your brand new couch, now you know why. And to make matters worse, companies are facing a huge labor shortage that hasn't been seen in decades. And no, we're not talking about the kind of labor shortage at your nearest Chipotle, but instead the kind of labor shortage that is causing significant delays in loading up freight trains in transportation, with the trucking industry having lost 6% of its pre-pandemic labor force of 1.5 million workers. And just like in pretty much any industry, truck drivers have just been showing that, you know what, maybe we just don't want to, drive for 10, 11 hours over the road, not see our families, or they're just wanting to spend more time with their families at home. And this is, well, going to start forcing companies in the logistics industry to increase wages for the drivers. Now, one of those companies is US Express, and their CEO has said that another 20% to 30% in wage increases may be needed to keep prospective drivers from taking other jobs, or just from saying, screw it, we're just gonna get out of the labor force and do our own thing. But this is easier said than done because companies now don't even have to worry about competing with one another, but also from other states like the state of Vermont offering $7,000 to move there. That sounds like a pretty cool deal. I've never been to Vermont, but if you're from there and it sounds like a pretty cool place to live, hell, just let me know. But anyways, this has trickled down to companies such as Nike, which has cut its sales forecast due to the supply chain issues to the single digits, as it now takes over 80 days to move goods from Asia to North America, or basically twice as long as it was before the pandemic. Now, the Adidas CEO has said the company will be unable to fully meet the strong demand for its products in the second half of the year due to the shutdowns, despite switching production to other regions. And no, we're not done, because what would inflation be without gas prices going up? Well, European and US gas prices have soared more than 350% and more than 120% respectively this year. Now, oil is up 50%, and Goldman Sachs expected that sweet Brent crude oil to hit $90 a barrel by the end of 2021. And this is not even the worst case scenario, because Bank of America has a price target of $100 a barrel by the end of the year. And the reasoning behind this is that the increase in crude demand will be due to the cold weather and the cold winter, especially in Europe, and an expected jump in travel and aviation as the world reopens. Now, granted, so as long as not another COVID variant shows up. Now, over in Germany, higher prices are hitting the entire system in every direction possible. Their economy is pretty much an import economy because they don't really produce many things, so they have to import everything. And compared to last year, natural gas in Germany has rose by over 178%. Iron ore has gone up by 97%, and even coffee prices have tripled in price. Now, over in France and Italy, inflation has accelerated to the highest levels in about a decade, and again, it's mainly because of the cost of energy going up. Now, Norway has decided to hike interest rates to 0.25% from 0%, being the first developed country to actually do so, while the Bank of Mexico just raised interest rates by 25 basis points to 4.75% as they actually expressed concerns about above target inflation. Now, by the way, this was the third time in a row that Mexico has actually raised interest rates because of inflation. Okay, now we finally arrived to housing. Well, we all know that house prices have pretty much skyrocketed out of the stratosphere, and last year, this year, especially this year, it just has been plain stupidity, with people basically selling homes $1 million above asking price, first-time home buyers being completely phased out of the market, and ultimately making people just even build houses out of a school bus like this couple. But I guess when home prices have gone up over 25% from a year ago, you just gotta do what you gotta do. But alright, I don't wanna buy a house, let's just go ahead and rent. Well, too bad, because even rents have increased in 2021, and since January of this year, the national median rent has increased by a staggering 16.4%. And to actually put that into perspective, rent growth from 2017 to 2019 has averaged only 3.4%. That's insanity. So anyways, when politicians are talking about that you should not worry about inflation, well, you do. And we could look at some of the data real quick, like the Price Consumption Expenditure Index, which is the Fed's favorite measure of, measuring inflation that tracks consumer spending, which was up 4.3% over the 12 months ending in August. And this was actually a faster pace than the 4.2% in July, and inflation has actually continued to run at the fastest pace since January of 1991. And the CPI index, the Consumer Price Index, which actually represents the average market basket of consumer goods, including food, energy, grocery, housing costs, and sales of other goods, has gone up 5% from last year. And this was actually the biggest increase since August of 2008, which was just right before the last financial recession. But now we've come to the last part of the video that you are actually waiting for. How are we going to make some money from all this, or at least protect from it? Because yes, inflation in fact does offer some really unique opportunities. And to me, the first one and my favorite one is real estate. Yes, I know, I get it. I'm gonna get it from you guys. Real estate is in a bubble. But if I'm able to find a good deal, even in this market, buying physical real estate is top of the list. And the reasons why is because appreciation of the property. Now, rental income also tends to go up during inflationary periods, and there are also some pretty cool tax advantage that I want to take advantage of with real estate. But buying houses is not the only way to get into real estate. You can invest in a real estate investment trust, otherwise known as a REIT, and these are companies that own and operate income producing real estate. Now, both property prices as well as rental income, just like I said before, tend to increase during inflationary periods. Now, REITs are also obligated to pay a minimum of 90% of their taxable income to their shareholders, which is really one of the really cool reasons to why they normally offer a higher dividend yield than the average dividend stock. Now, the other really cool advantage of REITs is that you don't need tens of thousands of dollars to invest in it like you do when you're having to purchase a home, because you have to put money for a down payment and closing costs, which can really add up to tens of thousands of dollars. REITs are just basically, they're like stocks. So if you want to invest in one, you just buy from a brokerage like Robinhood. Link in the description below. You get a stock, I get a stock. I guess I was gonna ask you guys to click on a link or something. But with that being said, you just buy a REIT for the cost of whatever the REIT is, and it could be $30, could be $100, could be whatever it might be. There are hundreds of REITs out there. Now, my second one is going to be the Energy Select Spider Fund, or the XLE ETF. And this is an exchange traded fund, and it has a very low expense ratio of just 0.12%, meaning that for every $10,000 that you invest in it, the management fee is only $12. So really cost efficient. Anyways, energy is another sector that can be really smart to hold during high inflationary periods, and the XLE is the largest ETF in its kind. Now, here I'm looking to capture the rising cost of energy across the world, and the XLE ETF has a portfolio mix of 23 of the large cap US energy stocks like Exxon, Chevron, ConocoPhillips, and more. Now, the XLE has been on a run this year, up 41% year to date and returning over 83% over the last 12 months. I know it's a little bit overbought, but I am really banking on the fact that, energy costs are not going to come down anytime soon, whether you look at oil or natural gas. Now, next, I'm looking at financial companies, especially banks. And the reason why is because financial stocks can perform really well during high inflationary environments. And the fact of the matter is that the corresponding rise in interest rates tend to push up profit margins for banks. Now, when rates go up, banks get to charge a higher rate to their customers. Now, you can invest in individual financial stocks, or if you want to get an exposure to all of them, my favorite one is going to be an ETF, and this is the Vanguard Financial Index Fund, ticker symbol VFH. Now, with this ETF, you can get a healthy dose of large financial cap companies like JP Morgan Chase, Berkshire Hathaway, Wells Fargo, Bank of America, Goldman Sachs, Morgan Stanley, and others. And last but not least, I'm looking to invest in Bitcoin, Ethereum, and other cryptocurrencies. Now, with all the FUD over the last 2 to 3 months coming out of China and regulatory concerns, Bitcoin has been able to sustain the 39,000 level as support. In my opinion, it's poised to make a run back up to 60,000. Now, Ethereum has held the 2,900 mark as strong support, and I do believe that if we do have a pretty good end of the year, it can definitely hit $4,500 to $5,000 a coin. Alright, that's basically it for now, guys. This is exactly how I'm investing and taking care of my money during the inflationary periods, and hopefully this video gives you some really cool education about it. Obviously, it's not financial advice or anything like that. You do whatever you like, but hopefully this helps you protect your cash or make more money from it and get some really cool education. Inflation does not need to be taken lightly. There are countries that are going through some crazy inflationary periods. You can look at Venezuela, for instance. That's actually where I'm from, and honestly, even to buy this thing, you probably need like a whole book bag full of cash. And that's just basically how bad inflation can be in its worst case scenario. But anyways, if you guys like the video, make sure that you like it, subscribe, share it with your friends, the whole nine. And I will see you guys in the next video. Thank you so much for watching. Goodbye for now.